Hello and welcome to this Go No Go show here on Thursday, July 20th, 2023. My name is Tyler Wood. I am a CMT charter holder and the co-founder of GoNoGo Charts. And today, Alex Cole sadly won't be with us, but I'm going to walk you through what's happening in the markets using these GoNoGo Charts tools. So let's dive right in, starting with our cross-asset heat map. As we can see, the S&P 500 continues to hold its strong go trend conditions. That's this top panel looking at equities indices. Our second panel looks at Treasury bond prices, and we've seen this real range-bound activity, kind of a messy looking chart, if you will. And so we're seeing that color fluctuation as the trend conditions can't quite find their meaningful directionality, at least on this daily time frame. So right now we're in neutral on Treasury bond prices. Now we can look at the commodities index in a strong go condition here on the daily basis, and we're going to dive into commodities more deeply today in this show. And of course, the last thing on our heat map is the dollar index. We use the ETF UUP representing the US dollar, but helping us understand some volume as well to those charts. Now, on a daily time frame, we're looking at these things fairly shorter term, but we can certainly see that on an absolute basis, we've got strong trends in both the equities and commodity space. So let's move into a couple of our macro charts just to get a sense of what's going on across that landscape. This is a weekly chart of the TNX. So remember, bond prices move inversely to yields. And a lot of chatter last week with commentary coming out from the Fed. Analysts love to speculate on the narrative. But as technical analysts, we know that the market itself is the best purveyor of truth. And so we want to follow what's happening from a price action perspective. So just real quick on this weekly basis, we have broken above this downward sloping, what we can think of as a trend continuation pattern. And so breaking to that upside is certainly cause for us to maybe keep an eye on rising interest rates here in the United States. Of course, this is the COVID crash. We had a rapid acceleration, which was very rocky for markets. And this stabilization period throughout 2023, we've just sort of been drifting lower, flirting in between neutral, no-go, and go trends. And if we dive into the daily basis of what we're seeing in the TNX, you can see that upside move more clearly. And we're, again, testing what was resistance as support. That's that concept of polarity that Alex and I talk about week after week. So important to keep in mind these classical tenets of technical analysis and making sure that our charts are not overcrowding the price actions, that we can spot these things in real time. So on this daily basis for the TNX, we broke above that downward sloping trend line, and we're finding support, perhaps leading us to a move higher. So as I mentioned, the U.S. commodities index on that weekly basis, really chopping around, really range-bound activity. And if we just take a look at this GoNoGo chart complete, we can see that on this weekly time frame, we've just been vacillating in this trend channel, coming from the lower to the upper bounds of this price range. What really draws our attention is the GoNoGo oscillator. And we had a series of GoNoGo squeeze indicators. And remember, that's our volatility measure. If you're familiar with Keltner channels or Bollinger Bands, you're going to be familiar with this concept that from compressed volatility, we can see expanding volatility. And on this weekly chart, covering most of the fourth quarter last year and through 2023, we have just been range bound in this broad commodities index here in the US. Where we're at right now, we're in neutral territory from a price trend condition, but we're at the upper limit of that trend channel. And what I was mentioning before about this GoNoGo momentum oscillator, what we've done is we've got a bounded momentum range from -6 to +6. And that objective zero line is what Alex and I really focus on to get an idea of directionality, trend continuation. And here we've just been flirting with that zero line really for close to a year, right? 12 months of what we could think of as kind of a basing area in this range-bound chop. But now we have decidedly broke out to the upside. Positive momentum for commodities. We're in neutral. And again, these are weekly bars. I'm recording this here midday on Thursday. So we'll have to see where the week ends up. If we just dive into this on the daily basis, you can see that chop frustrating a lot of long-term investors, but certainly a trader's paradise. And we can see that we're in strong go trends on that daily basis as we break to the upside of that sideways channel and range bound activity. So let's move on. When we think about commodities, we don't want to just look at commodities index and look at the absolute trend. We want to get under the hood and we want to compare commodities on a relative strength basis. If you're a portfolio manager benchmarked to the S&P 500, you can take a look at a heat map like this that's showing the relative strength of a number of different commodities. Mixed agriculturals, we're looking at hogs, corn, wood, industrial minerals, precious metals. And what we're seeing on this chart is that the leadership for commodities is really pretty concentrated. We're seeing steel and we're seeing nat gas leading the way. We've also seen some positive moves for the First Trust gas ETF as well, relative to the S&P 500. So again, keeping in mind, we're going to look at a lot of absolute trends, but we're also going to compare things on a relative strength basis because technical analysis gives us that toolkit to compare securities. So taking a look at the absolute trend of this steel ETF, we certainly have consolidated, broken right back to those 2022 highs from March, April, and May. We had broken out earlier in 2023, a strong counter trend correction into the spring, and here we are in the summer retesting those areas of pretty key resistance. And so we're looking to see what happens with steel on the go forward basis. If we dive into that daily time frame, we still have that positive momentum that we saw on the weekly time frame, but consolidating above that resistance level from back in 2022. So we're keeping an eye on steel, and of course, all of this is to help sort of bust apart that narrative. We've heard a lot of macro strategists, we've heard a lot of economists really down on this bull market that we've experienced in U.S. equities. A lot of the bearish case is to be made on the lack of sound economic global expansion. We're not seeing the expanding GDP. They're anticipating recession. So when we get into charts like this, the home construction ETF, home builders index, and we can see this rising trend channel that's certainly flying in the face of what a lot of the economists have been predicting, and seeing that expansion in the commodity space for materials and also construction. That's the real economy. And it's not just a very narrow leadership of a few large cap tech names that are bringing this market higher. We're seeing lots of new green shoots and go trends existing in lots of different places. So on this home builders ETF today, a strong counter trend correction, a heavy down day. But when we have the context of this rising price channel, and we can see that we're still in positive momentum, the way that we talk about using GoNoGo charts is to remain objective, right? And so the most objective thing we can do with momentum is define a neutral level. So when a security is in trend and it surges to overbought momentum, that's a very positive sign for the security. And we want to make sure that we're watching this zero line to see if we can find support. Where there is support for momentum, we can expect a trend continuation icon. So if this GoNoGo oscillator reaches the zero line, we're going to watch to see it. If it finds support and moves back higher, that's going to give us these green circles, so that when we're in a go trend, we can spot those areas where buying the dip makes sense. And it's not just a diamond hands cultish TikTok trader phenomenon, but actually based on more quantitative measures. So that's a look at the daily chart of US home construction ETF. Let's continue on our macro overview, moving away from commodities, the US dollar here on a weekly basis. And we're looking through a couple of longer term charts because we have seen a lot of chop in both the Treasury market as well as currencies, where we've just sort of drifted lower in no-go trends. So on this weekly basis, a lot of range bound activity, shortly moved into a go trend, back into neutral. This week, we are in a weak form of the no-go trend. So those are the pink bars, just as a refresher. And we're below and retesting the zero line from below. So we had dipped back into negative momentum. A lot of analysts talking about this rollover in the US dollar being a strong tailwind for risk assets and for equities, generally speaking. So that's a quick look at the US dollar. Let's turn our eye back to equities. Let's take a look at the S&P 500 from a price action perspective on the daily basis. series of higher highs and higher lows as we continue to see trend continuation icons, these green circles, showing us that momentum is finding support at the zero line with GoNoGo oscillator, that objective area of support, and surging back into positive territory. Right now, we're at a +5, which in GoNoGo Charts terms means that we are overbought on the S&P 500. But remember, George Lane and the first introduction of stochastics, or Wells Wilder with RSI, those overbought signals were not designed to be the absolute sell. It was to show us that there's potential areas for exhaustion of a trend. We might see some counter trend correction. Right now, we're seeing sustained overbought momentum, which is a very positive sign for that upward move. Enthusiastic buying, strong momentum. These are not signs of bear market activity, but just something to keep an eye on as we might look to see some more choppy range bound or consolidation at the index level through this summer. But as we say every single week, it is not a stock market, but rather a market of stocks. And we want to make sure that we're keeping an eye on some of that rotation and expanding breadth. And so just as we were talking about the economists earlier, what we can see from this rel map is each of the S&P sector ETFs relative to the benchmark index. So we're just taking a simple ratio and we're applying that same GoNoGo trend methodology, looking at each ratio in this heat map. And of course, we have seen throughout 2023, our growth equity sectors like information technology, consumer discretionary, and communications have all been leading the market higher. And it was fairly narrow. It was stylistically just those growth sectors that were leading the market. But in recent weeks, we have seen expansion, particularly within the industrial sector, the XLI. But we've also seen this flirtation from the financials sector outperforming the S&P 500. Yes, you heard me correctly, financials outperforming the S&P 500. So some of those cyclical sectors of the economy are catching a bid. We're seeing expanding breadth and rotation of leadership into new sectors is really as Ralph Alcampora told us, the lifeblood of bull markets. So these are really constructive signs for us to keep an eye on and certainly separate what we think we know or what we think we believe about long-term economic forecasts and just focus on what is happening right now and stay on the right side of those trends. So as we talked about the industrials, one quick look at the S&P Capital Goods Index. And this is large cap industrial names consolidating above these 2021 highs. So this is a weekly look. We saw it peak out in the summer of 2021, kind of rattling around at this resistance area. Heavy correction throughout 2022 as we all experienced that bear market activity. But here we rallied back. We were rejected at this area of resistance, and now we have broken above here in June, and we've just been tearing to new highs in this capital goods index. So when we think about the industrial sector and we think about consolidating above prior year highs, multi-year resistance, that's a very bullish activity. It means we've broken through overhead supply, and we're moving on to new highs. Now, I mentioned financials, and I just want to take a look at this on the daily basis first, on an absolute basis. This is the XLF, the financial sector ETF of the S&P 500, in a strong go trend, coming back up towards these highs from February. We've seen things tank. You certainly remember the headlines from the bank collapses, Signature Bank, Silicon Valley, a lot of deep distrust in the financial system. Turned out to be more of a liquidity event than a solvency event, as we experienced in 2008, but it certainly rattled a lot of investors, heavy selling in the XLF. Now, it took time to base and recover, but what we're seeing is expanding go trends to the upside, and they're strong trend conditions. We've got overbought momentum on heavy volume. We're at a +5 in the GoNoGo oscillator. And it was, this sign right here where we found support, built a bit of a squeeze, and then broke out to new highs, both with positive momentum and the price action moving into those strong go trend conditions. So financials catching a bid is certainly a positive for the bull camp. But let's just look at that XLF relative to the S&P 500. So that sector rel map that we were just looking at, taking the ratio of each of those sector ETFs, these are very early days on a relative basis. for financials to be outperforming the S&P 500. We've just dabbled with the Go trend. We've found support at 0 for momentum. We've moved back into positive territory, a +4. So for those who worry about missing the big leg of a trend, one of the things that technical analysis allows us to do is to take that contrarian bet, to remove our emotions or what we think about financials and simply trade what is right in front of us. I want to take this a step further. KRE is the regional bank ETF, and we certainly saw that collapse even faster and further than the broader financial sector, which includes things like insurance and broker dealers, and not just banks, and certainly not just the regional banks. So isolating to where the real terror was in February and March, we can see that even regional banks are catching a bid and moving to the upside, resolving out of this max go-no-go squeeze to the upside in a go trend and reaching positive territory. Again, heavy volume here on this strong go trend for the KRE. To get just a little bit more technical on you, one of the things that a lot of analysts have been pointing to is the volatility, and the volatility particularly of the bond market. Right here in March, I was running a panel discussion with Urian Timmer, global macro strategist for Fidelity, as well as Jim Bianco, famed macro strategist out of Chicago. And these two gentlemen are the best in their game. So I'm not beginning to tell you that this is original thought. But what we were looking at was the volatility of the fixed income markets. The bond market was rattling around. I think Jim Bianco's quote was, the 2-year was trading like it had the Harlem Shake, right? High vol in 2-year treasuries is not the norm. And that volatility certainly moved, as we saw, regional banks and the broader financial sector much, much lower. But that MOVE index, the ICE, the ICE MOVE index, is tracking bond volatility, and we're continuing to see that decline. We're in strong no-go conditions, and just recently saw some positive momentum on this MOVE index. It's resolved lower, hung out at the 0 line, built a squeeze, and now resolved to the downside. We've got negative momentum on a strong no-go condition for that bond market volatility. So this is a very favorable, this is a tailwind to what we're seeing in terms of the trading environment here in July. Now, for a little lighter note, as we move to the end of today's episode, wanted to wish the U.S. women's team the best of success in the World Cup. And Alex and I put out a daily idea earlier this week on fuboTV. So catching a strong bid, breaking above these prior highs on strong go conditions. This is a streaming sports channel and just one of the communications stocks that we track that have been outperforming the S&P 500. We're certainly not throwing out those great growth equity names to shift entirely into financials and industrials, but wanted to wish Megan Rapinoe and the whole team the best of luck and wishing them success here in the World Cup. And maybe you're going to be watching it on fuboTV. So here we are, strong momentum, heavy volume. We're coming back. We'll see if we can test the 0 line and see if this is more of a consolidation pattern before we move higher. So thanks so much for being with me today. Hope you are all enjoying your summer. Take care of each other, and we'll see you again next week.